Hey, Austin McKnight here, branch manager of the McKnight team at PRMI. And I hope you really are ready to enjoy decoding interest rates in PRMI's construction loans. This is a unique feature to PRMI that is different than any other lender that I know of that is offering government construction loans. And I'm really excited to share it with you because I think you as a customer truly benefit from this feature as a part of the interest rate process and strategy. So as we've talked about earlier, with the one-time close, we have one loan that closes up front, no payments during construction, and you start making your payments after construction is completed and you start that permanent phase of your mortgage. And so with that, we really don't know what rates are going to do in maybe 9, 10, 11 months of construction and which direction they're going to go. And so with PRMIs, our construction loans, our interest rate strategy is this. We close and qualify you based on 1% higher than today's rate. And with that, during construction, that rate is kind of floating during that time. At the end of construction, before you make your first payment, we give a automatic, I said automatic, one-time float down and re-look at that rate. The cool thing is it can never be higher than what you closed at. The great thing for you is it can only improve. So again, we're closing and qualifying you at that 1% higher. I like to call that rate a worst case rate in payment. And then we're re-looking at what that rate is at the end of construction. So if you think rates are going to be better in 10 months, 12 months from now, then great. You get almost an automatic refinance for free at the end of construction. If you think rates are going to be higher than they are today, much higher, like maybe they go to like 10% or something crazy, then great. You're going to be capped at that worst case rate in payment because that's what we've qualified you at. We've qualified you at that worst case rate in payment. And so we're not going to increase that at the end of construction. And so here's a great example. We qualify and we close you in, let's say, January at 7.5%, which means if you were done with, if you locked today, you closed the loan today, and magically you built the house all in one day, it was a very busy day and a very long day, we would float you down from that 7.5% down to 6.5%, and you would start making your payments based on the 6.5%. But let's use another example. Let's say you closed in January at that worst case rate of 7.5%. Construction took about 10 months, so you got finished in October. But rates in October now are at 5%, where they were at about 6.5% when you closed, and we qualified you and closed you at 1% higher. We're going to float that rate from that 7.5% that you closed at down to 5%. It's a one-time float down, and you start making your payment from there. Once you start making your payment, it is fixed for the life of the loan. Let's look at another example. Let's say again, you closed at that 7.5% rate in January, and construction took about 10 months. Now in October, rates are not looking as good. They are looking about 9%. Well, the good news is you don't have to re-qualify for the loan, and we're not moving your rate up. You see, with a 2 close, you would be stuck with whatever rates are at the end of construction. And with our one-time close loan, we locked you in at a worst case rate in payment. And so if rates at the end of construction are 9%, guess what? You're going to make your payment. You're not going to get a float down, but you're going to make your payment at that 7.5% that we qualified you at. This is a great protection for you. We've seen both sides in the last few years. We've seen where rates decreased with COVID and everything. We've seen where rates have jumped up and people have been able to lock in at that worst case rate being in the low fours, which seemed high at the time, but when they were done with construction, it was much higher than that. And they were very happy with that 4 being locked in because, again, if they were to have done a 2-time close, they would be stuck with whatever rates are. They'd have to requalify at that much higher rate. And what if they don't requalify at that time? That can cause all kinds of stress and problems. And so I find this to be a very unique feature that PRMI offers. We close and qualify you at that 1% higher, giving you a one-time, and it's automatic. It's not something you have to request. It's not something that we make you jump through hoops for. It is automatic, a part of our process to see if we can get a better rate for you at the end of construction. I hope you find this just as exciting and a great feature as we do. And like I said, I don't know another lender in the space that does the rates the same way. And this really is being able to give you a competitive rate at the end of construction without having the cost of refinancing. Again, if you haven't watched all of our videos, please watch the other videos. And if you have any questions or you'd love to schedule a call, please use the link above to schedule a call with me. I'd love to talk to you about your scenario and how we can help build your dream home. Thank you.